Hey everybody, John the Economist here, coming at you with an exclusively Bitcoin episode. And if I'm being honest, a relatively vain Bitcoin episode. And the reason why is that I'm actually going to review some of the calls that I made over the past year or so worth of Bitcoin price action. And this isn't to sit here and gloat. That's really not my intention. Especially because of the fact that there's definitely calls that I got wrong about short-term price action along the way with this journey of them making some right ones more so on the macro, larger time frame aggregate scale. And so I'll be as honest as I possibly can be about telling you guys where I got things wrong, but then also making a point of showing where I got things right. And the reason for this is simply to show that technical analysis, I think, in many ways does work, especially compared with good fundamental analysis and good emotional management in trading. But the second reason why is because of the fact that now we're getting primed for a bull market. I might say things that might be more, I shouldn't say now that we're getting primed for one. Now that it is more likely that we are going to enter a sustained uptrend than it was in the past, I also want to demonstrate how we can check our biases in the reverse, right? Because everybody looks like a genius when the price is going up no matter what. And that's where a lot of misinformation and people that don't totally know what they're talking about can get involved in the space and mislead a lot of people. And so I'm going to go through some of my calls. I'm going to talk about where I think Bitcoin is headed in the long term and point to some reasons why. And again, that call can be totally right or totally wrong. It's just my personal opinion, and I'm going to provide data to back up that opinion. Um, and then the third thing I'm going to do is just kind of like, I've been in the markets for 4 or 5 years now. I want to add some words of caution that I wish I knew last bull market or the bear market before that, so that hopefully you guys don't make the same mistakes. And unfortunately, I think human nature warrants that you have to make the same mistakes and learn from them in your own perspective. But maybe some of the advice that I can provide on things like emotional management and checking your biases can be helpful in that journey. So that's kind of the intent of this episode. And then next week, I'm going to review a paper probably on my stable coins, because stable coins have kind of been a hot button topic lately. So I think it'd be a good time to review that one. Yeah, without further ado, get into it. So first things first, I got chopped to bits in this section right here. Why? Because I was fighting the fact that there was a change in the trend, and that was a bad idea. I was still in denial during this section here of the fact that we are about to be in a sustained bear market. And that's not easy to admit, that it took us to, go down about 45% before I officially recognized that we were in a sustained bear market. The second reason why I got chopped to bits here is I drew a support line based off of prior price action in this range right here, that white line. You guys see that white line? I'll thicken it up a little bit so it's a little easier to see. Boom. Nice giant white line. And if you notice, the price action dipped below, above, below, above, below, above, below that white line. So as far as having a reliable support slash resistance line drawn to trade off of, I wasn't doing that whatsoever. And for that reason, in this section here, when I was trading, I got chopped to bits. Probably some of the worst trading that I've done since I've been trading, which again, I've been doing this for, I'd say investing for about 5 years, trading for about 3. So there's clearly me saying, this is where I messed up. And if you look at tweets that I made or comments that I made, I was still pretty bullish about the fact that we were going to do like a cup and handle type pattern, do a little bull flag, and then continue to work our way up. And that was me failing to check my own biases about some of the red flags that I generally in the past respected very, very well. The main thing, which again, this is something that's been coined by an analyst named Ben Cowan on YouTube that has been very useful in my trading journey, and I borrow ideas from him. The main thing is the fact that we were below the bull market support band, this 20-week moving average, right? And up until we got rejected by it the second time, which is, by the way, the bull market support band, quote unquote, is this blue and gray line right here. And so I'll even highlight this in white so you guys can kind of see what I'm talking about, because I know I have a lot of moving averages set up, right? So pretty much this area. Oh God, this area. And so when we first dipped beneath it, I should have said, oh, there's going to be a lot more downside ahead. And it wasn't until we dipped beneath it, came back and tried to get back above it and failed that I really was officially able to check my bias and realize that there's a lot more downside ahead. And so that's where I messed up primarily. And look, I mean, I didn't do a ton of buying in this range, like bringing new money in, which I'm happy about. But I did try to do trading with the money and the profits that I did have, and it did not go well. So there's me checking my biases. But once I finally saw the light that, oh, this is going to be a long, long bear market to the tune of what 2018 looked like for the people that rode the 2017 bull market, I finally was able to successfully pretty much trade on the way down. And really, I didn't do much trading. I just did, oh, it's going to go lower, it's going to go lower, it's going to go lower, and then started trading again relatively recently. And so, again, I'm going to be a little bit vain and kind of walk through what my psychology was from that point forward, from when I finally realized, oh, we're due for a long, brutal correction where some spirits are going to get broken because of the fact that that is the only way that this market can heal from the fraud that had occurred, the insolvencies that occurred with certain companies, the entire stupid NFT craze that people went on and on about that was virtually worthless. Sorry, NFT fanboys, but it is the truth. And I'm just going to kind of walk through some of the comments I made. So May 7th is when I finally was like, oh, we got some more down to do. And so I didn't say anything publicly. I just texted my dad and my brother and said, I feel like crypto is going to do a huge down sooner or later. I have a cash position ready for sub $30,000 Bitcoin. And good thing I posted that and had a cash position ready, because it came down, caught the low 20s for a little while, and then kept going down. While it was in this low 20s range, that's the first time I started saying things that were very publicly bearish by posting on Twitter. I said, looks like we're holding the second lowest log regression band as support for the time being. Expecting a relief rally, which based off of the date that I posted this, we didn't really get one. But I think the lowest log band is inevitable. I expect any pumps in crypto or equities to be sold off. And I was keeping an eye on equities because I was pretty bearish there too. And so on May 7th, when I sent that text to my family, we followed that up with a 26% move to the downside. And then for this other post, we had a 45% move to the downside. So in total, if I were to just grab it from the top candlestick, from the moment I went bearish, we saw about 52%. So yes, am I bummed that I missed, the 35, 40% move to the downside that I didn't catch? Yes, we saw another 52% after that. And I had cash sidelined because of the fact that I felt like I saw that coming. Around the middle of this very long accumulation range that I think all of us thought went on way too long and was very brutal to sit through, I said, defining an accumulation phase is not necessarily black and white, but one thing I'm near certain of is that Bitcoin's has only just begun. This relief rally is not going to lead to new all-time highs. That was on the 22nd of July. And from that point on, we did set a small new high after the 22nd of July. But overall, 200 days have gone by. And we are still at the same prices that we were when I first tweeted that. Now, we've seen a lot of bullish price action in the short term recently, but most of this was just going sideways or down for some odd 150 days of that 200 days. So I was correct in the sense that no new bull run came, no major highs were set. We just accumulated by coasting sideways. Another one right here. This one is from September 1st. New high for the DXY, which, as we know, oh my gosh, these trade, I swear, when I start recording, the Trading View advertisements just skyrocket. They go moonside. It's almost like they know that I'm screen sharing the software. I'm sure there's something they have built in for that. But as we know, right, the three things that I've been keeping an eye on through this bear market, as I've been talking about it for the past year, is inflation needs to start coming down. The Federal Reserve needs to stop raising rates, and the United States Dollar Currency Index, also known as the DXY, needs to start coming down. At that point in time, it was not coming down. It was setting new highs. So the stock market downturn continues, which I know is not exclusively a crypto market downturn, but we did see more down from that point on. Moving on to my next one. Tagging Bitcoin, S&P 500, Dow Jones. I said all of them are butting up against the same resistance levels that killed the past several rallies so far. In that situation, I believe it was once again the 20-week moving average for Bitcoin, and it was some different moving averages for the Dow and the S&P 500. Don't get bullish at resistance. Wait for it to clear it. We did not clear it. In fact, just a few days after that, and I can't tell the future, this is just looking at the technicals, the data that the market was giving me at that point in time. But this is right before FTX collapsed. So FTX collapses. I actually tweeted it on the day that FTX began to collapse, even though Bitcoin went down about 18% on that day. And then the day after that, it went down about 17%. The total downside from the high there was 26%, right? But finally, as FTX was collapsing, is when I posted this: buy when there's blood in the streets. And this is, I think, the first like buy the dip kind of post that I had put out in quite a long time. And I stopped being as bearish because I felt like the world's second largest crypto exchange collapsing in on itself felt like a relatively decent bottom indicator. For anybody that kind of was in crypto Twitter or hanging out in this range right here, this is like the time where like people would insult you for owning Bitcoin. People that had previously owned crypto, that I knew had previously owned crypto, insulted me for owning Bitcoin or caring about Bitcoin whatsoever during that time. And that's, I guess, a piece of it, market psychology perspective advice. Generally, if it's embarrassing that you own the asset that you were once very bullish on, where people are insulting you for owning the asset, or they think that you're financially irresponsible for owning the asset, that's the opposite market psychology that you hear when we're at tops, right? At tops, it's a new paradigm. Bears are seething. You should keep buying, buy the dip. We're going to the moon, right? Getting insulted for owning the asset in the first place is the market psychology inverse of a top. Otherwise, it might be a sentiment bottom, which a crypto trader named Cheds, who I'm a big fan of, actually said during the Luna collapse, we have reached a sentiment bottom on November 8th and 9th or whenever it was, somewhere near there. So shout out to him for recognizing that, because he was bearish way earlier than I was when we entered this bear market. He saw it sooner than I did, and he was able to check himself out of that psychology very quickly by recognizing the fact that people were insulting each other for believing in crypto in the first place. And that's probably a pretty good bottom indicator. I'm going to take a sip of water because for whatever reason, my throat feels like it's a desert. And then to kind of cap off this entire journey here, I said, first successful break of the 100-day moving average since March 2022. Also entering back into a previous range, about to push into the 20-week moving average, also known as the bull market support band that we covered. Super critical area right now. Be on the lookout for a break and or rejection, right? And a rejection off of that level would have made me feel like we had more downside ahead, but we didn't reject off of it. We broke out of it. And from that point forward, we've seen, I'm just going to take it from the wick today, even though I know we're down. We've seen a 40% move, right? And most of my buys were in this area. And from those buys, which I know most of the stuff that I bought was right here, we're up 60% almost. Going from wick to wick, basically. So again, the point of me walking through this is not to be like, oh, hey, look at how amazing of a trader I am. But like this worked out really well. And now I have also YouTube video evidence from my past couple of videos that I thought we were going to move up. I was eyeing this area to take a profit, which I did. And I was eyeing this area to re-enter those profits, which I did. And then we had like a God candle yesterday that I'm currently enjoying the additional profits of right now. So what my point is with all of this then is, okay, I ended up getting a lot of stuff right. What's my perspective on the future? And how can we check ourselves out of these biases as quickly as possible to maybe recognize when there is going to be a shift in the trend? And this is where technical analysis is important because of the fact that if you respect these trend shifts and you respect what the data is telling you, it's not going to predict the future for you, but it is going to greatly increase your odds of success. At least that's my personal feeling. A lot of people don't think technical analysis works. I know so many traders that are successful off of pure technical analysis that I cannot possibly fathom that technical analysis does not work. It's just that most people aren't super good at it. And the people that are great analysts don't necessarily trade off of their good analysis. And those are two very critical components to being successful, is not only making the right call, but then actually acting on that, because that part takes guts. It takes risk, and some people just aren't cut out for that psychologically, which is okay. Maybe you should stick to investing, which is mostly what I do, is mostly invest, but there's levels to all of that stuff. So taking a look at short-term price action here, right? We caught this as support, and then we moved up quite a bit out of that and broke 25K. Now, 25K is super critical, and here's why. I'm going to move to my cleaner Bitcoin chart that has less random TA lines on it and pull up my moving averages and switch to the weekly chart. Taking a look at the weekly chart, there are 3 to 4 freight trains all rushing towards each other right now. And it could be a pretty bad collision. So first one is the horizontal resistance of setting like a true undisputed higher high in the trend, right? If we are able to rally above this and have a weekly close above it, that is massive for the bullish case for Bitcoin. Absolutely massive. The other thing is that we are at the 200-week moving average right now, which previously has served as a very long-term support for Bitcoin. Prior to this bear market, we have never spent any more than 1 week time period underneath the 200-week moving average. That was not the case at all this bear market. We have spent months underneath the 200-week moving average, which implies that it's going to serve as some pretty strong resistance. So horizontal resistance setting us up for a true uptrend to begin, the 200-week moving average, and the 50-week moving average. So you got horizontal, important, 200-week, important, 50-week, important. And price is butting up against that right now. And so here is piece of wisdom number 1. If you don't know where the price is going to go when it's heading towards a very critical area of resistance, don't force a trade. Don't do something just to do something. If you feel uncertain about it, let the trend ride itself out. Because and then just have a plan for either scenario, right? Like I said, I traded this area very successfully. So it'd be really stupid of me to force a trade that I don't feel as confident about and potentially wash out those profits. Instead, what I'm looking for is one of two things. One, we get above these lines and we keep trending up, and that's fine. I'll enjoy the profits until I feel like there might be a correction due at some point. The other option is we get rejected off of this line, and the next place that we would go most likely is to test that bull market support band, that 20-week, 21-week moving average, which is going to kind of do something like this in the short term here, right? What these white lines are doing. So we would come down and probably test that probably for weeks, right? And if we were to do that and it looked like we were holding that as support, I personally, this is not financial advice, would probably be loading up in that area ready for another move to the upside. So those are kind of my semi short term perspectives on the market is we're at very critical area right now for the price. You need to be looking with the least amount of bias possible at what the data is telling you and whether or not we're going to get rejected and have to go build support somewhere else for a while, or if we're just going to blow through this like it's nothing and keep trending to the upside. Those are the two. And I know like those are the two options. Yes, John, price either goes up or price either goes down. Of course, those are the two options. But I do have a plan in place for both of those options. Now, if we were to get rejected off of this, dip below and then fail to hold the support and lose it as support, right? Lose that 20-week moving average as support, go beneath it. From my past experience of not checking myself out of my own biases, I generally know that if we lose the 20-week moving average as support, that we have more downside ahead. And so at that point, I would probably look to make a sell rather than a buy. But frankly, I think that outcome is less likely than just holding it as support for a few weeks or even months longer before trending up again. So that's kind of my current, perspective on it. Now, from a long-term perspective, I do want to point out something interesting. And I think I pointed this out in a previous video, but now we have a little bit more data to back it up. And I just kind of want to talk through this. So let's add some lines here too, because who doesn't like more lines on some data? It makes it so much easier to discern, right? So there's a couple things I'm going to look at here. Halving cycles, RSI, and time. Sorry, I need to draw one more line. There we go. Okay. So for those that don't know, Bitcoin runs on roughly a 4-year cycle referred to as the halving or the halvening is the event that causes the halving, which is where Bitcoin's supply paid out to miners is cut in half. Now, with the supply reducing and demand remaining constant, I've done enough economics videos on this channel for those who follow me to know where this is going. That usually means price increases. And this has been a very powerful narrative for Bitcoin, essentially since its inception, is that halvings cause bull runs. So there's that in combination with taking a look at weekly RSI. And when the weekly RSI finally breaks out of its downtrend when it enters a bear market. So the bottom of 2015 happened 78 weeks before the 2016 halving. The bottom of the 2018 bear market, not bar market, happened 74 weeks before the halving. And then hysterically enough, this got nudged over a little bit somehow. Let me make sure there we go. The current bottom, we don't know if bottom has officially been hit yet, so I don't want to say 100% the bottom, but the current lowest price that Bitcoin achieved during this bear market also happened 74 weeks before what is going to be the halving. Plus or minus a few weeks. We don't know exactly when the halving is going to occur. We know it's going to be in spring of 2024, most likely April of 2024. So take that into consideration. We are the same distance from Bitcoin's bullish event, the halving, that we were the previous 2 cycles. Then let's take a look at RSI. RSI broke out of its downtrend just a couple of weeks after the bottom got hit for the 2015 bear market. RSI broke out of its downtrend. Depends on what you want to call breaking out of its downtrend for this one. For me, I'm thinking like right here. That happened 6 weeks after its bottom. And for Bitcoin, most recent bear market, I just want to make sure I'm calling this out correctly. The RSI broke out of its downtrend. I need to line this up better. 6 weeks after that bottom hit. Again, so many advertisements. I mean, I guess I don't look at charts for 30 minutes straight, but come on, TradingView, help me out here. Trying to make a bunch of money on this YouTube channel. It gets millions and millions of views. So I think these are all interesting, right? Because, well, the intermediary price action, and when I say intermediary price action, I mean like literally like this chunk of price action and this chunk of price action, they look different. Like the shapes they take look different. The narratives that come out look different. All of these things look different. But 2 things have remained constant. RSI breaks out of its downtrend a few weeks after the bottom for these 3 instances that we're looking at. And the bottom occurred just under 80 weeks, 78, 74, 74 before the halving. So in previous cycles, what happened was we coasted like sideways. Like we had bullish, we had bearish, we had bullish, we had bearish. And then that bull run officially began once the halving occurred for the most part. So that makes me weary of this idea that like we're just going to skyrocket from here. And I think that's kind of where people's mentalities are at right now. And that's why, look, there's a lot of money to be made in short-term moves. And by short-term, I mean moves that take several months. I'm already up 60% on some buys. I was able to sell some profits there and re-enter them at lower prices and continue to ride this wave up. And that might continue to happen. But be wary of the fact that this probably is just going to go new bull run and we're just going to go straight bullish, right? Because never in the past has that been the case. It's kind of been like a sideways year of like whipsawing around and then heading up. And so that's something that might be worth considering what your time frame is and if you intend on trading this. And like to me right now, like long term, and this is, I'm going to say this is not a call. This is not a trade. This is purely a speculative prediction. So do not take this to the bank. What I think is most likely is there is some clear resistance in like this general area. And so what I could see happening is something that looks like moving up. Oh no, that's not the arrow I wanted. I'm so sorry. And now I have to delete that arrow that I don't want before I can use the arrow I do want. There we go. I could see something that looks like, you know, short-term correction to build some support off of the 20-week, blasting off past that 250-week, rejection off of this level, right? Short-term, whatever. A top. Then here's the other thing. There's a ton of resistance built up right here. Why? Because a bunch of people went long, not as much in this area, but definitely in this area because we thought we were breaking out. That's kind of how double tops formed, is that people think the bear market's over and then, oh no, it's actually just begun, right? So it's probably going to be a decent amount of resistance in this area. A lot of people might take the opportunity to sell once we actually break past this region. because a lot of people have money trapped up there, and the economic conditions aren't like all peaches and cream right now, and they might want to use that money for different purposes once they get close to break even. So to me, that's kind of where a correction opportunity can present itself, right? And maybe, from a timing in relation to the halving, maybe I'm getting this wrong a little bit. Let's see if I can edit this guy. I think I can, right? Like, let's say it looks something like more like that or whatever. And then right before the halving, there's a dump that occurred right there. Right before the halving, there was a dump that occurred right at the halving, basically in the 2015 to 2016 area. So I think it's possible that once we kind of get to this level, we dump down again to levels that people think are really scary, and then that's when we head up, right? Now, considerations, and again, because we're this theme of this episode was really about biases and checking yourself out of them. There's a war going on. There's still recessionary pressure. Financial conditions are still incredibly tight. Bitcoin, for all we know, is not going to do the same things that it previously did because of the fact that this entire area of Bitcoin's existence, the economic times kept improving over time. And that's not necessarily the case. So while I would love this thesis to play out where, by 2025, we're topping out again and, huge run up to probably not like 200K, like this arrow is suggesting that it's going absolutely moonside, but, maybe 100,000 or something like that. Like, as much as I would love to say that for sure is going to happen, that's not. And so again, theme of this video, watch your biases, right? For me, I'm not going to make the same mistake again that if we have weekly closes below that 20-week moving average, that I'm not going to think mentally, oh, like that, I should just ride this out. It'll be fine. No, that might be an opportunity to take profit. I don't know if it's an opportunity to take profit, but I should look to check myself out of those biases. I should keep an eye on sentiment, right? When people are insulting each other based off of the price action, that seems like a really good sentiment, like indicator, right? Like, oh, you're an idiot for not being bullish on Bitcoin, or you're an idiot for being bullish on Bitcoin. Both of those, I saw comments calling people idiots here for not owning Bitcoin or thinking Bitcoin's going to go down. And I saw people calling each other idiots here for thinking Bitcoin was a worthy investment in the first place at any given point in time. Keep an eye on those sentiments, right? What people on Twitter are saying, what your family and friends are saying. Because if your family and friends are talking about Bitcoin, then that also might be a red flag as well, right? Because I guarantee you, your 50-year-old aunt is only talking about it to you if she's like saw it on the news somewhere, right? So like sentiment stuff, right? Like keep that in mind. And then the other thing too is be okay with being wrong, because we're going to be. I was wrong a lot of times through this bear market, this entire section here. I started the video saying I was really wrong about my entire perspective on the market, trying to trade that perspective in the market, what even resistance and support lines I was trading off of. I was wrong there. And so when you're wrong, maybe it's time to like reset, right? And don't cling on to those biases. Don't cling on to those things, because then it's just your ego getting in the way, and you will lose money as a trader if you're letting your ego trade for you. I can guarantee it because it's happened to me before. So hopefully this was a decent, informative video. I think this is the longest I've ever talked about exclusively Bitcoin in one setting. We're coming up on 35 minutes now, so sorry for being long-winded. I tend to be long-winded in the first place. This does not help with that brand. But regardless, I hope the video was informative. And if you have any questions, feel free to hit me up. I am happy to kind of share my thoughts on where the market's going and where the market's headed. And again, like, do your own research. I'm just a guy on YouTube. I do have qualifications to speak on this stuff. I have a master's degree in economics and I work in finance, but that doesn't mean anything, right? Make sure you're doing your own research, making sure that you're checking my biases, making sure that you're checking your own biases. And hopefully you do not make some of the same mistakes that I made trying to learn how to trade. And I'm sure I will make plenty of mistakes in the future trying to trade. So always something to keep an eye out for. Oh, and if you're trading, use a stop loss. Pretty good idea. Because otherwise you're not trading, you're just losing money and then you call yourself an investor because you lost a lot of money trying to trade. So that's kind of the little pieces of wisdom, the little tidbits and things like that. Very quickly, very quickly, the dollar index has seen a nice rally, but Bitcoin's price has hung in there with it. If it's coming up on a critical level, if it starts to go down from here, I would expect a rally in stocks and crypto. Federal funds rate is starting to taper off. They still are going to continue raising interest rates, but it's starting to flatten out. And inflation did come in hotter than expected. So that is once again something to keep an eye on, but it is still headed in a downward trajectory. Inflation in the first half of the year ends up being hotter than inflation in the second half of the year. So we might see inflation putting up more of a fight for the next 6 months than we anticipate. And that is definitely something worth keeping an eye on because, again, federal funds rate, inflation, dollar index are three things that I'm keeping an eye on as far as macroeconomic market conditions on whether or not we should be bullish or bearish about risk on assets. Thanks for watching the video, and I will see you guys next week. Peace.